Daily Fiscal Pulse for the 15th of April, 2026. Everything you're about to hear reflects conditions through Wednesday's close. This is a one-day look back on the flows, not a live snapshot. Let's set the stage for what's moving markets today. The Iran and Middle East conflict is dominating headlines right now. You're seeing stories about the US Navy blockade of Iran entering its fourth day, tanker traffic updates coming out of the Strait of Hormuz, and that narrative is clearly bleeding into price action. But separating signal from noise matters, so keep that in mind as we walk through the numbers. The headline number today is a net fiscal transfer of $98.7 billion. By itself, that's solid. The real story emerges when you look at the trend line. The 5-day flow has decelerated to about half of what we've been running. Tax receipts are carrying most of the weight here at $169.3 billion. The S&P is showing some resilience underneath all this. ES futures settled at 7,060, staying above the 20-day moving average which sits at 6,690. You're working with about a 705-point range over that 20-day window. Price is holding despite the fiscal headwind we're tracking. Things get more granular when you extend the view a bit. Government spending on a 5-day basis is averaging roughly $46.6 billion per day. Put that alongside the 20-day average of about $3.5 billion and you've got a clear slowdown. Less money is flowing into the system, less cash reaching households and filtering into the markets. Financial conditions are tightening. The year-on-year picture confirms the pattern. Fiscal year-to-date spending stands at $873.0 billion, representing approximately 4% more than the corresponding period last year. That's a substantial boost to fiscal support and it does matter for overall liquidity conditions. If you're considering a long ES trade here, that backdrop deserves attention. The fiscal environment isn't exactly generous. Our conditions gauge is sitting at -85. That said, context cuts both ways. We've navigated similar setups before, and historically the S&P has averaged around plus 0.9% over the following month even when liquidity is softer. Markets don't track liquidity in a linear way. Positioning adds another wrinkle. Leveraged funds have been accumulating long exposure, and margin debt is in the 96th percentile. Those levels typically function more as a caution than an all clear. What's the practical takeaway? With fiscal flows running below prior year, the shock absorber in the system is thinner. On positive news days, the market can still push higher, but when a risk event emerges, like escalation in the Iran and Middle East conflict, the downside moves faster due to less liquidity sitting underneath. 3 straight days of declining fiscal transfers is worth flagging. That deterioration pattern usually shows up in market moves with a short delay. A few dates warrant your attention going forward. The 22nd of April marks the SSA payment cycle, which falls on the 4th Wednesday and can alter near-term flows. The 15th of April individual income tax deadline represents the year's biggest reserve drain event. Fiscal drag is definitely showing in the numbers, but the tightening pace might be starting to stabilize. The next catalyst likely hinges on how these scheduled flows execute. That's where the opportunity sits right now.